So, as India's policymakers start gearing up for the 2026 budget, they're doing a lot more than just crunching numbers. Honestly, it looks like they're navigating a total maze of economic pressures, coming from everywhere, inside the country and all around the world. It's shaping up to be one of the toughest budget seasons we've seen in a while.
And that really makes you wonder, right? Is India's 2026 budget walking straight into an economic storm? Because this isn't just some routine financial plan. No, this is a huge test of national strategy against some pretty serious headwinds. So let's break down exactly what those key pressures are.
All right, first up, pressure point number 1. This one comes from right here at home. You see, after a really long run of super strong growth, there are signs that the domestic economy is starting to cool down a bit. And you better believe international analysts are taking notice.
This quote from the global firm Bernstein just nails the feeling in the air. They've actually downgraded their outlook on Indian stocks, which kind of suggests that the era of easy, massive growth might be fading. When they say policy levers are exhausted, they're talking about things like huge government spending. And the feeling is, well, that tool has been used about as much as it can be.
So what does a neutral outlook really mean in plain English? Well, it's not about predicting some big crash, so don't worry. It's more of a signal that things might be shifting into a quieter phase. That period of supercharged market-beating returns could be winding down. And for the budget, that means you can't just count on explosive growth to fill up the government's coffers.
And this chart, wow, it really highlights one of the core worries. Indian markets are trading at a serious premium compared to the rest of the world. We're looking at what's called a price-to-earnings ratio of over 20, when the global average is closer to 15. That's just a fancy way of saying stock prices are already pretty high based on what companies are expected to earn. It leaves very, very little room for another big jump.
Okay, so you've got this cooling off happening at home. Now let's add another layer to the mix. Pressure number 2, global trade turbulence. The whole international scene is just unpredictable right now, and that's creating some serious friction for India's economy.
And you want a perfect example of this turbulence? Just look at the stalled trade deal with the United States. And get this, there are two completely different stories about why it stalled. The US side kind of suggested it was all because of a missed phone call, but the Indian government pushed back, saying that's just not accurate, and pointing out that the leaders spoke multiple times. The disagreement itself just goes to show you the kind of diplomatic friction we're dealing with in a really key economic relationship.
But here's the real story, at least according to the Indian think tank GTRI. These huge, complex negotiations don't fall apart over symbolic stuff. They hit roadblocks because of real, deep disagreements on crucial things like tariffs, farming, and digital trade. See, it's about the policy, not about phone calls.
And this number right here, 50%, this drives home the real-world cost of all this friction. Some Indian goods heading into the US are getting hit with tariffs as high as 50%. That is a massive tax on trade that hits Indian exporters right where it hurts, and it ripples through the whole economy. It makes finding a solution incredibly important.
And finally, let's bring it back home for our third big pressure point. Because while the central government is grappling with all these global issues, it's also facing a rising chorus of financial demands from its own states. This is a huge piece of the budget puzzle, and it really gets to the heart of the strategic challenges that state governments are up against.
I mean, just listen to this quote from West Bengal's finance minister. It puts the issue in sharp focus. We're not talking about small figures here. This is a demand for nearly 2 lakh crore rupees in what they say are pending dues. That's a massive, massive sum. And it just shows you the scale of the financial tension between the center and the state.
And listen, it is not just one state. The central government is looking at a whole range of demands from all over. You've got Punjab asking for promised flood relief funds, Telangana needs more money for essentials like health and education, Jharkhand is worried about delays in getting their funds, and Goa just wants to make sure key central programs keep running. Every single one of these requests is a strategic headache for that state and another significant pull on the national budget.
So you take these 3 powerful pressures, a cooling economy at home, a turbulent global trade scene, and growing demands from the states, and you put them all together. What does it all mean for the budget that's coming up?
And that brings us right back to that phrase from the Bernstein report, little bits of everything. It just paints such a clear picture, doesn't it? A year of patchwork solutions, of trying to please everyone a little bit, but without one single powerful growth story, like a massive infrastructure project or a tech boom, to really drive the whole economy forward.
Which leaves us with the final critical question. A national budget is really a statement of priorities. So when you're faced with all these competing pressures, which path does India choose? Will it be tight fiscal discipline, a big push on social spending, or maybe a risky bet to try and kickstart growth again? The answer is going to define the entire year ahead.
Hey, thanks so much for tuning in. If you found this explainer useful, it would be awesome if you could like, share, and subscribe to Research Debris for more deep dives like this. And of course, we'd love to hear what you think, so drop your thoughts in the comments below.